Alphabet, Google just reported earnings. The stock popped 7% after hours. It's tapered off. It's up about 6% right now. Let's dig into it. Let's look at the earnings highlights. We'll also look at valuation and a chart. I'll tell you if I think the stock is still a buy or not at these levels. So right now it's back up almost 7%. It's over $130 a share. Now year to date on Alphabet, Google, this is the A shares, GOOGL. You can also buy C shares, that's GOOG. The only difference is voting rights. I prefer the A shares. Year to date, up over 37%. Over the past year, it's up about 16.37%. Over the past month, it's up about 3.27%. Now 10% after earnings. It's up over 7% after hours. The 52-week high was 129.04. It's now above that 52-week high after hours at $130.85. 52-week low is $83.34. 27.59. So it's approaching a 30 PE ratio, over a $1.5 trillion market cap. So Google earnings, what happened? So Alphabet reported a 7% increase in revenue for the second quarter, boosted really by Google's cloud computing unit. Cloud revenue climbed 28%. So Q2 GAAP EPS, earnings per share of $1.44, that beat by 10 cents. Revenue of $74.6 billion, that's up 7% year over year, beat by $1.84 billion. YouTube ad revenue, $7.67 billion versus $7.43 billion. Google Cloud, $8.03 billion versus $7.87 billion. Traffic acquisition costs, $12.54 billion versus $12.37 billion. Here's a quote from the CFO. Our financial results reflect continued resilience in search with an acceleration of revenue growth in both search and YouTube, as well as momentum in the cloud. We continue investing for growth while prioritizing our efforts to durably re-engineer our cost base company-wide and create capacity to deliver sustainable value for the long term. Now, if you look at Alphabet Google, the business model historically, this is Alphabet for 2022. And on the top left, it compares Google Cloud for 2022 versus AWS and then Microsoft Intelligent Cloud. And you can see they're the clear number 3, but they are continuing to grow. And more news on that here in a second. YouTube ads, you can see we're up 10.4%. Other bets are a very small amount, 0.38%. Google Cloud last year was 9.36% of revenue. Google Search and other was basically 58%. And the YouTube ads, $29.2 billion. That's about 10.4% last year. And if you look at the revenue from 2017 to 2022 by segment, you can see on your screen, it breaks it down for you. So Google Search and other, in 2017, this is going to be in millions. It was 69,811 to 162,450. YouTube ads, exponential growth there from 8,150 to 29,243 last year. And Google Cloud has gone from 4,056 all the way up to 26,280 last year, again in millions. So total advertising, you can see 95,577 to 224,473. So we had a slowdown last year with advertising, and that did impact Google Alphabet's business. And so investors are looking to see, is that trend improving? Are businesses spending money on advertising again? And that looks to be the case. It beat expectations, but the bar was pretty low again. So beat expectations on top and bottom line, strong Google search advertising and cloud. And revenues overall rose 7%, beating forecasts for a 4.4% gain. Google search and other revenue rose 4.8% to $42.6 billion. And YouTube ads rose 4.4% to that $7.67 billion. The Google network ads dipped to $7.85 billion from $8.26 billion. The operating income rose over 12% to $21.8 billion. That's primarily in Google services. The Google Cloud operating income turned positive. So for the first time now, Google Cloud, the operating income has turned positive. This is good. Also announced plans to change the CFO. So the current CFO is going to continue to serve as CFO while taking on the newly created role of Chief Investment Officer. So she's still going to stay on, and this is effective September 1st, and she'll lead 2024 in long-range capital planning while the company seeks a CFO successor. Alphabet also took severance and related charges of $2 billion for the 6-month ended June 30th tied to workforce reduction. And something to note, Google is testing a new AI tool that writes news articles, which is something interesting to keep an eye on. So Q3 2023 financial highlights, quarter end, June 30th, hot off the presses. Revenues, you can see 2022, you can see 2023, nice scale up, but it's only a 7% change in revenue if you look at year over year. So that's not amazing growth, and it probably shouldn't carry an extreme valuation. We'll look at valuation metrics here in a minute. You can see that operating income up to 21,838 and that operating margin up to 29% from 28%. And here's a breakdown by segment. You can see that Google Cloud $6,276 806 to 8031. Some pretty decent growth there from 2022 to 2023. Something interesting to note here, other bets 193 to 285. As announced on April 20th of 2023, we brought together part of Google Research, the Brain Team, and DeepMind to significantly accelerate our processes in artificial intelligence, AI. The group, called Google DeepMind, is reported within Alphabet's unallocated corporate costs, prospectively beginning in the second quarter of 2023. Previously, the Brain Team was included within Google Services. And you can see the breakdown here. Now, other bets went from negative 1339 to negative 813, so something to note there. So other bets, which includes Waymo, the self-driving car business, and Verily Life Sciences unit, reported a 48% increase in revenue to $285 million. Of course, this is over a $1.5 trillion, so that number's not very big. But this is one of the reasons that people like to invest in Google, because of some of these moonshot ideas for future growth. And it's important to note that that division still lost $813 million in the period. So looking at revenue growth here from 2019 to current, you can see massive growth in 2021, up to 60%, and that's really fallen off a cliff. So the numbers here have improved over those last couple quarters, but that growth is still only 7%. So the stock is now up about 8.31% after hours. The earnings call is going on, and it really could move either direction depending on what happens on that call. If you look at the 52-week range, this was $83.34 back November 3rd, 2022. And the 52-week high was just in June of this year, June 7th, 2023. Until today, at least after hours, now at $132.37. So Alphabet Google is well over a $1.5 trillion market cap. The price to sales ratio is 5.51. And the PEG ratio is 1.73. And that's not terrible. I mean, you prefer closer to 1, but a 1.73 isn't terribly expensive. The PE for this year's estimate on Fidelity shows 22.8, and for next year's estimate, 19.3. But of course, if Alphabet keeps doing well, they may continue to beat earnings and raise guidance, and they could grow into that PE ratio even more. And this could be less if you look at next year's estimate. So the question is, what should something like Google Alphabet stock trade at? Should this trade at a 20 PE ratio, or should it have more of a premium because it's involved in cloud services? It's the leader in search. It has some of those moonshots we talk about, like Waymo, artificial intelligence with Bard, even discussions on satellite broadband internet, and much more. This is a tech conglomerate. It's a mega cap tech conglomerate. They've got their hands in so many pots. And for me, this is one of my core positions in my portfolio, and I do like the stock. Next, I want to look at a chart. I'm going to show you where it's come from and where it might go next. Now, before I do that, if you're new here, please subscribe to the channel and click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. I'm trying to get this channel over 50,000 subscribers this year, and you can help me out by subscribing today. I also need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. We use technical analysis in Fired Up Wealth to get better entry and exit points for long-term investments. Generally, when we invest, we're trying to invest in quality companies and hold them 3, 5, or more years. Now, it's not just buy and hold forever. It's buy, hold, and monitor. If that story changes, sometimes you have to sell the stock. If the stock gets frothy, if it's going parabolic, sometimes you have to trim the stock. So we do chart day every single Wednesday in Patreon Discord. We're going to be doing one here this Wednesday. And if you're interested in joining us live every single Wednesday, you can visit patreon.com/firedupwealth and join the elite tier or higher. We cover QQQ and 20 individual stock picks or ETFs from community members. So 21 total tickers we cover every single Wednesday morning at 9 o'clock a.m. Eastern live. Now, again, this is A shares, GOOGL. You can also buy C shares, just get rid of the L. And this is a stock that we were accumulating heavily in 2022, especially towards the end of the year, under $100 a share. So you can see a previous chart day here in orange. I like it under $100, long, DCA, dollar cost average. Now, of course, the stock ripped here, double bottom from around $84 up to $108, pulled all the way back. So this is kind of like a slanted triple bottom, and then it just took off from there. You even have a little bit of a gap right here. This thing got all the way to $129. It sold back off, found its footing around $118, and now after hours, this dotted blue line, it's all the way up here. So the next stop, if this continues to be bullish, you'll probably see somewhere around $135 a share. So is Alphabet Google stock still a buy now or not at $130 a share? Obviously, I liked it much better, $100 or less DCA. If you missed that run, it's up, 45% year to date. I still don't think this is a bad company to accumulate shares in longer term, especially if you're holding 3 and 5 years. There's lots of momentum here. You think of average advertising, if the economy continues to get better, that advertising is going to continue to improve. They're continuing to develop more tools around AI, especially in the cloud services. I love enterprise AI solutions. So when I did that top 10 AI stocks to buy for the next decade, Alphabet Google is one of those stocks. And it's because it can sell to enterprises. It can really scale. So you think a Google Cloud Platform, GCP can sell to all these different enterprises and charge per employee, and really with recurring revenue in that situation as well. So this has the advertising segment, which is cyclical, but it has several other segments that I do like. And I think that YouTube's going to continue to do well over the long term. I think advertising will still do well over the long term. Of course, you look at Microsoft and you think of ChatGPT and Bing, and there's some competition there, but Google still dominates search. And I think that's going to continue for quite some time. Of course, you always have to keep a handle on your investments. It's never just buy, hold, and forget. You have to continue to monitor. Right now, I still see a lot of long-term strength for this company if you're thinking 3-5 years out. So if you buy it at $130 a share, you're not getting the cheapest price ever. But if you're dollar cost averaging and you're not buying it all at once, and you're trying to build a position in your portfolio and you're thinking 5 years out, I think you're going to make money in the stock. I would rate this as a hold. If you already own it, I don't think you're selling it. I don't think you're buying it. If you don't own it, you have to be a little bit careful chasing here. I still think, again, if you're thinking long term, you're going to be okay. But just understand, if something happens with the overall market, this could sell off. Thanks for watching, guys. Make sure you subscribe to the channel if you're new. Drop me a like, drop me a comment. Have a great rest of your day. Take care.